All right, Theo traders. Are we live? We good? Let me just double check before I start talking. Can you see me? Can you hear me? We back? Okay, good. We're in business. What's going on, everyone? Good morning to most of you. It's the evening for me here, broadcasting to you live from Central Italy, Gianni for TheoTRADE. And today is Monday, the fourth day of what we have decided to call Auspicious August, because very interesting developments unfolding in this market. You know, we just have been pretty much straight up for the last 4 months. And over the last I'd say the last like 3 weeks, 4 weeks, we've been warning like, hey, this trend, this uptrend is not really as sustainable. Last week we had some real cracks emerge in the rally. You know, we did see utilities emerge as the top performing sector in the S&P 500 over the last week. And in fact, that rally was so strong that it actually ended up becoming the best performing sector over the month. So what I'm actually going to do here is, if I can pull it up, I want to share my oh, let me grab it for you here real quick. I got my my sector bullseye Monday article for you. So let me just drop that here in the chat, because I summarized it a bit more concisely there. You know, it's really just one of those situations where the bears have a beachhead, but the bulls still have the higher ground. So I still am focused on us getting ready to buy the dip. I have quite a bit of cash in the portfolio. In fact, over in the Trinity trade, I'm sitting at about 50% cash. My other portfolio is about 25% cash, 25 to 30% cash. And so even though we're rallying today, believe it or not, I'm actually making pretty good money today. Good rebound to the upside. But those of you that have been trading with me long enough know I'm just not really the biggest fan of Mondays. And it's not because I have a hangover from the weekend, right? It's just because I see Mondays as kind of like a chasing of the sorts. You know, people coming back from the weekend. You know, all weekend it was, oh, you know, I always make this joke. Every time we get a sell-off, there's people online calling for a 1929 style crash. And so I saw those types of tweets again. You know, we get 2 days off from the all-time highs, and oh, you know, look at this setup. It's just like the market from 1929. Hope you're ready for a Great Depression. And then here we are on Monday, and we're seeing a nice rally. Now, to be very, very clear, I don't think that we're out of the woods yet. And I'm going to break that down into much greater detail throughout today's session. Okay, but before I get into all that information, I want to start off with some mindset material. And I decided to summarize it by saying the following: higher learning, higher earning. You know, it used to be back even, not even so much during my time in college. I was kind of like one of the last cohorts of college students to experience this. You know, you go to college, you get an education, you graduate from college, you get a decent job, and you're able to basically do what you went to school for, afford a basic standard of living, you know, buy a house, do what you want, et cetera, et cetera. Well, I think the game has changed. I think that in order to achieve that higher earning from that higher learning, you need to be much more invested in private education. And this is basically what we do here at TheoTRADE, is private education of the sorts. You know, we're not a university, we're not a college, right? But we are from the School of Hard Trading Knox. We do try to have you avoid paying that notorious and infamous trader's tuition. What is trader's tuition? Well, you know, sometimes people get into the market and they get in during the early stages of a bull market and they make a lot of money very fast. You know, they might just be getting started off in technical analysis. They think this game is easy. They're not paying attention to the risks versus the reward. They think stocks only go up. They think that crypto is going to replace the US dollar, et cetera, et cetera, et cetera. Now, I'm a bull, right? Don and company like to make fun of me for being bullish most of the time. Well, that's fine. I'm okay with that. The point I'm making is that you're not going to get exceptional or extraordinary results if you're just doing the average things. Okay, if you're going based off of fundamentals, fundamental analysis, that doesn't give you an edge. That doesn't give you an edge. What gives you an edge in today's world? You have to be ready and able and dedicated to doing the things that other traders won't do. Because by definition, the market averages 7 to 10% per year. By definition, 90% of quote unquote professional money managers underperform the benchmark year after year. So you're telling me that 90% of supposed professionals can't beat 7 to 10% per year. They're the ones using fundamentals. They're the ones that say that charts are all voodoo. They're the ones that don't believe in cycles. They're the ones that don't believe in really anything that isn't taught at a university. So you've come to the right place. If you want to learn what the people who truly have an edge do and what they have to offer, you have it here at TheoTRADE. So settle in, get ready, get to know your instructors. I know many of you have been around here a long time, and many of you stick around a long time for that reason, because there is an edge. There is an edge that we offer here at TheoTRADE. And if you're new, welcome, you're in good company. I'm also going to reveal today the easiest trade ever. The easiest trade ever. Okay. What is the easiest trade ever? Well, I want you to think of trading as kind of a balanced, or like a scale of the sort between time and ease. Okay. So, people say this is like what the financial advisory industry says. Oh, if you just hold stocks and never sell, you'll always make money. Well, there is some truth to that. Otherwise, they wouldn't be allowed to say that legally, especially being in the advice field. But there's a fine line. There's a gray area where you don't need to hold stocks forever. But if you hold stocks forever, your likelihood of outperforming isn't that high. And that's what I'm here to do. That's what I'm here to share with you is how I outperform the market consistently. Been outperforming for years, and it can be done. And I do it without winning all of the time. And I do it with, sometimes going through weeks or months where I'm not really beating the market, or really not doing that much against the market. Account's just spinning its wheels. That's not been the case over the last 4 months. We've pretty much been straight up. But I'm actually preparing myself now for one of those periods where, hey, for the next 4 to 6 weeks, there might not be much going on in my account value. So that is my baseline expectation for myself. Why? Because I know how I trade, I know my strategy, and I know the environment in which it does well. Know yourself, know your strategy, know your edge. That's all it's about. So I'm going to show you the easiest trade ever, going back actually about 15 years. I'm sure if you went back in time, you could find it even longer, but that's the data set that I have compiled for you. So I'm also going to talk about what I'm going to be doing in the meantime over the next few weeks. I'm not just going to sleep, guys. I'm not just living here in Italy, living the Dolce Vita, and halfway. The joke I was on a call with some of the internal guys is because these mountains behind me, that's basically like the gateway to the south in Italy. But I'm not just sitting around here in the heat. It's actually very pleasant today. I'm broadcasting on the back balcony here. It's about 82 degrees, a little bit of a breeze. So actually pretty cool. It hasn't really been that hot. I mean, when I was a kid, we'd have days on end, upper 90s. And I told you guys we finally got the whole house air conditioned. We had it on the main floor and in some of the bedrooms, but we renovated everything, modernized. Let's say we Americanized the home, so to speak. So no, it's good, but no, it's pretty much business as usual here, except it's just not really that hot. And then of course it's Monday, so we're going to be looking at the mid cap sector. So I'm excited for you guys to be here with me today. Really looking forward to surfing these charts with you. Who do we all have in the house today? Hope you guys had a great weekend. Yesterday we had a memorial in my village here. Actually, I wish I could send it to you guys pretty easily. They did like a it was like a car show and a bike show, and it's an annual memorial for a man who was kind of like the town businessman. He was actually my godfather, but big time into the balloon business, believe it or not. The biggest factory in this area actually pumps out a bunch of balloons. I'm fairly certain it's the biggest balloon factory in Europe, and it's been in the same family for over 100 years. And the family's last name is actually the same last name as my grandmother, on my mom's side, and it's the town here that my house is in. So yeah, that's where a lot of the locals get work. If they basically don't want to go to the city and just stay in the area where they grew up. So anyways, that's what I did over the weekend. Visited most of my family, saw my grandma, saw my aunt, saw most of my aunts. Unfortunately, we did lose one of my cousins, my mom's first cousin. So my first cousin, once removed, he passed away yesterday. He lived down the street from us, so we got some memorial stuff going on for him in the coming days that I'm gonna have to attend. But aside from that, it's August in Europe, so things a little bit slower here, and trying to take advantage of that when the markets aren't ripping up and down, left and right, and side to side. So, all right, who we have here? We have Darren. Say hi to the new pope. I might make it out to Rome. My main goal is actually to go to the beach. I was in Rome twice last year, so I don't really need to go all the time. I want to go to the beach though. I haven't been to the beach in a few years. In Italy, I was in the beach in Florida back in March. But take the wife, leave the kids with the grandparents. My aunt's coming out in a couple of weeks, so leave the kids with the grandparents, get a little bit of a getaway, and head to the beach. Tim, Two Carter, Ed Mines. It is right now it's about 5:43 p.m. in Europe or Central European time. SHP, Tony, Shirley, Nora, John G, Frankie, Bonlune D, Harry, Byron, Ray, ZTM, Irene, Nance, Paul P, Les. Looks like I'm outside in the olive field. Kind of cool little backstory about the mountain. I mean, there's olive trees all over here. If I turn my camera right there, there's like a fig tree right by me too. But that mountain behind me was actually owned by one of the biggest bankers in ancient Rome, who during the Civil War, when you had Caesar fighting against basically when Caesar came to power, he killed all of his enemies. Well, he played both sides. Very, very typical banker, right? Typical banker. But yeah, that was his mountain. That was his country estate. So little, I don't know, maybe it's in my blood, this whole finance thing. You never know, right? I like to think that sometimes. Roger Bro, Anthony V. All right. Michael, how you doing? You were in Denmark. Very nice. Yeah, it is going to be hot next week, Austin. Yeah, I'm looking forward to it. Balloons for flying or the circus? No, more the I guess it's both. I mean, they're not hot air balloons. It's like party balloons. How far am I from Luca Adele? About 4 hours. Randy, how are you? Steve V. Appreciate the condolences, guys. Yeah, he was yeah, good, down the street. So our his father and my grandmother were siblings out of a family of 11 back in the day. But yeah, they down the street from us here. So Steve, Casino David, Brent, Wamuka. Oh, Darren, you saw Pope Francis. Yeah, I've actually never seen a Pope before, believe it or not. Calvin, G-Man, Steve Zim. Appreciate you guys tuning in. All right, let's get over to the charts here because I know that's why you guys are really here, not to hear about my travel adventures. But oh, can you hear the church bell? I don't think you can. I was asking some of the guys at Theo. I was like, oh, is the lighting okay? Can you see me? Like, do you hear the background noise? Because there's cicadas in the background. There's the church bells. And normally I don't broadcast outside, but if it's gonna be like this, why not? Let the kids scream inside, you know what I mean? So, as we normally do, I like to begin my sessions by looking at the currency market. Okay. Currency market is the biggest and most important in the world. It's the most liquid. It's where the central banks play. It's basically the real deal. It's the big enchilada. Okay. And there's three currencies that you need to be fully aware of what's going on with at all times. The first one, obviously, is the US dollar. Okay. World reserve currency, deepest and most liquid bond market in the world. The US dollar runs the world. That's why it is the world reserve currency. Then you have the euro. Okay. The euro is also pretty important. I track that pretty closely as well, as you can imagine, since I spend quite a bit of time back and forth. And then the third one is the Japanese yen. The Japanese yen is also very, very important. Not only because Japan is a economic powerhouse, but because their central bank is one of the most active in the world. And so here we are looking at the dollar yen, And, it's been trending higher really since that low of April, but I would actually characterize this as mixed. And, it's a good time to remind you that you need to understand that there are trends that exist across different time frames. We're looking at the daily chart here. I like to consider the daily chart as the short-term trend. You jump over to the weekly chart. I like to consider the weekly chart as the intermediate term trend, and then the monthly chart as the long-term trend. So you can have a situation where you may have an uptrend in the monthly chart, a downtrend on the daily chart, and a neutral or mixed trend on the weekly chart. Simply put, you have an uptrend when there are higher highs and higher lows on a chart. You have that here in the dollar yen, okay? I always like to use this as an example because it's very good. You have a downtrend when you're making lower lows and lower highs. And we were in a downtrend in the dollar yen, basically from January. I would even argue up until May. It wasn't until you started making these higher lows in late May and early June into early July where the integrity of the short-term downtrend started to become disturbed. Now you could even make an argument that the short-term trend is turning up. You got some higher highs and some higher lows. We're going to talk about support and resistance later this week, as we always do. But I always say, you always hear the technical analysis. It doesn't have to be intimidating. It doesn't have to be all these fancy indicators and fancy chart patterns. I love that stuff. I spent a lot of time in my life learning it. I'm always learning more about it. But just by following trends, just by following support and resistance, you can become a significantly better trader that I would venture to say could outperform the majority of money managers on Wall Street. Okay, so that's why every week, I know we have people joining us on a weekly basis here at TheoTRADE. I like to run through these very simple and I would say fundamental techniques of technical analysis. So we were rejected. We formed a lower high compared to that high from late March here in the dollar yen. The dollar's been weakening a little bit. Gold and silver rebounded today. Stocks are up a little bit. Bitcoin and Ethereum up a little bit today. Do I think that we're in the all clear? I actually don't. I actually don't. And I'm the notorious bull of TheoTRADE, right? And I'm not even saying that we're going to drop 20%. I just I'm kind of in the 5 to 10% correction camp. And actually, I wouldn't even say 10%. I'd say more closer to 8%. So I don't think it's going to be very severe. And we might not even get close to 8%. It might just be like, 5.5%. It just gets drawn out a couple of weeks. We're in a seasonally turbulent period of the market. What is seasonality? Why do we bring up these seasonal factors? Well, it just so happens that at certain times of the year, markets tend to behave a certain way. You ever hear of sell in May and go away? You ever hear of the October surprise? You ever hear of the Santa Claus rally? You ever hear of as goes January, as goes the year? Well, then you've been exposed to the concept or the theory of market seasonality. And it just so happens that August and September tend to be a bit more turbulent. Now, that's especially the case in the year after an election year, and I'll share some data with you on that in just a moment. So, when it comes to the dollar here, the reason I care so much about this is not just because, I like to nerd out about central banks and macroeconomic policy. No, it's because I want to know where the money is flowing around the world, because the markets that are most likely to outperform are the ones that have money going into it. And you can read and measure whether money is going into a country depending on if the currency is appreciating or not. It's that simple. It's that simple. So you want to know if money's coming to the United States? You need to see the dollar rising. You want to know if the money is leaving the United States? You'll see the dollar falling. That's where it starts. Remember, all of the countries around the world have different laws and rules and regulations when it comes to their economy, different tax rates. Okay. We don't like to talk. We don't during my sessions. I'm not like, this president good, this president bad, this party good, this party bad. But there are economic policies that help growth, right? We can acknowledge that without getting into politics, right? And so, you see this in places like Argentina. We've seen, the euro suffer for a long time. I've been making all sorts of jokes. Like, I'll actually show you. I have this water bottle here. I say America has AI, and this is what Europe likes to innovate. These water caps. Okay. I mean, Is that really what is that really what we need? And actually, sometimes when I like to drink water out of the bottle, like it, hits you in the face, right? So it's a joke, guys. We like to have fun with these things. But when you see the euro rallying like it has year to date, money's been going back into the eurozone, and it's not because of these plastic caps. I hate to break it to you. It's not the money is not going back into the eurozone because of these plastic caps. Okay, as nice and as lovely it would be to think that was the case. Money is going back into the Eurozone because they are trying to reindustrialize. They are trying to rebuild their own military due to geopolitical tensions, due to the United States basically saying, like, hey, we're not going to play security for you forever, especially, if you are not holding up your end of the budget when it comes to NATO. So when a government decides to invest in their infrastructure, in their military infrastructure, in their energy infrastructure, it provides investment opportunity. Yes, Europe is still going to be buying a lot of software and energy from the United States. It strengthens our ties with them more that way, but they still have their own big defense industries. They still have their big semiconductors in the Netherlands. It's just not like the United States. But there was a big flip at the beginning of the year, and now the market is a bit more interested. However, that being said, I don't know if the rally in the euro is going to continue, because what happened over the last month or so is that we rallied back up after this high in early July and formed a lower high. Then we took out this low from mid-July, made a lower low. Is the trend rolling over? Is it turning back bearish? That's a serious possibility. And the reason I say that is because, let me see here. Is my thinkorswim? There it is. We've been in a long-term downtrend in the euro. The euro peaked back in 2008, and I gotta say, it really wasn't that fun coming over here back then, because we would just get absolutely destroyed in the exchange rate. Okay, now it's a little bit better. It's a little bit better, and the reason why you need to understand where we are in the long-term trend is because the market's generally going to have the biggest moves in that direction. Look at how long and how steep some of these downswings were in the euro. They were mainly to the downside. Yeah, you've had a pretty big rally year to date, but that's nothing compared to the sell-off we saw from 2021 into 2022, or from 2014 into 2015. Okay. Or even really when the bull market in the euro topped out in 2008 into 2009. So again, you always want to know what the long-term trend direction is for that very reason. Let's go ahead and take a look at the euro against the Japanese yen. It's a rather quiet day in the forex land. You are seeing the yen come up a little bit against the euro, but the euro's been on a tear. It's been where the money's been flowing into, and it makes sense. Where have the top performing stock markets been year to date? They have been in places like Greece, Poland, Germany, Netherlands, Austria. I could go on. They've done very well. They've done very well. So, yeah, now that could flip. They'll probably still end up, there's only 5 months left in the year, 5 full months, August, September, October, November, December. We're in the beginning, really the second trading day of August here. So, we could have a situation where the European stocks still finish off the year with strong returns, but basically the bulk and the majority of those returns have already been achieved year to date. So that's a scenario I'm looking at, and it does open up some tremendous opportunities for the US market. Now, on Friday, we had one hell of a rally in bonds. This is something that we have been more open-minded to. We have been generally in the bullish camp for bonds. It's been a lonely trade. There's not been a lot of action. There's not been a lot of conviction because, I was like, oh, I think the trend is turning up because of some of the cycles I track. I like kind of the macroeconomic backdrop for interest rates to fall. Crude oil prices are contained. These bonds can rally. They can rally, but they haven't really that much. That may be starting to change based on what we saw on Friday. You had a really strong close to the week in long-term bonds, and you saw long-term bonds outperforming to the upside. That is a good sign. That is what you want to see. And you've already pretty much erased all of last month's losses. So that is a good sign when it comes to the bond market, the treasury market specifically. Once again today, you're seeing long-term bonds outperform to the upside. Could this be a flight to safety? Could this be a form of hedging for some equity volatility from stock market volatility here in the US. It's certainly a scenario that I'm monitoring right now. However, we do know that the tech sector specifically likes lower interest rates. So if bonds are starting to pump, that can mean more liquidity is coming into the system. There's been a lot of controversy about this BLS stuff, and the jobs reports and all that. And for good reason, right? There's plenty of controversial material there. But the Fed has been able to play this game where they're like, oh, we're not going to lower rates because we're worried about inflation from tariffs, and the job market is strong. And they're using this economic theory. It's called the Phillips curve. I'm not going to get into it too much today. Look it up if you want. But basically, it's this inverse relationship between unemployment and inflation. When inflation is high, they believe unemployment is low. When unemployment is low, or when unemployment is high, inflation is low. Okay. That's not necessarily always the case, but it's the model that they use over at the Federal Reserve to kind of help themselves make policy decisions. Okay. Whether or not to raise or lower rates. Well, we got some trade deals, and tariffs are nowhere near as bad as we thought they might have been back 4 months ago. Because now, guess what, guys? I mean, on Thursday, this rally turns 4 months old on Thursday. I mean, yeah, we're off from the all-time highs, but we've pretty much been straight up over the last few months. So, yeah, a rally in bonds is totally in the cards. And you take a look at crude oil. You are seeing some more selling today. We are up off the lows. Did we make a lower high here? I would venture to say that's a possibility. But I'm also leaving the door open for this low back in April to be one of significance. In other words, I'm not ruling out the possibility of the low being complete in crude oil, although we could see another important low come in the next few weeks. And we haven't really been doing much trades in the energy space. VG's been one we've been watching. XOP modest rally today. XLE holding up a little bit, but not really where the action is. The action today is in the stock market. Nice rebound. We've pretty much recovered most of our losses from Friday when it comes to the market at the index level. You are seeing the NASDAQ outperform to the upside, along with semiconductors and technology. That is generally a bullish sign. The top performing sector last week, utilities, still having a pretty good day, though. So it's not like utilities are asleep. You take a look at some of the other defensive areas of the market, like consumer staples and healthcare, they're up as well, just not as much as technology. You do have consumer discretionary lagging a little bit, and you do have communications seeing a nice rally, but not up as much as utilities. So I have been getting the question lately from some TheoTRADE members, and I think it's a very good question. And it's one that I have been entertaining in my mind a lot lately. And I was entertaining it quite a bit earlier in the year, and then we had that rug pull in the market in March and April. So it's hard for me to say based on the actual response from the market that the game has changed, but basically people have asked, hey, like with all this AI stuff, with all this nuclear stocks going crazy, does the outperformance by the utility sector still mean that markets are preparing for defensiveness? And it's a good one. I don't really have a direct answer. I'm going to say that the traditional relationship still holds up, mainly because what we saw earlier in this year, okay, like in the January, February time period, you were seeing utilities do well. And then we did get the rug pull. But you were seeing utilities do well more in the longer term time frames. Now, some of the best performing sectors are technology, communications, industrials, when you start to zoom out and have a bit of a longer term time horizon. So I think that's pretty important to at least be open-minded about, because again, correlations can and do change. So let me go ahead and share this chart. I talked about how it's really not uncommon to see some weakness in post-election years for stocks around this time of year, and it can even lead to some turbulence into the month of October. Now, to be clear, I don't think that turbulence will last that long. Like I said, I mean, you pretty much have already had 1 week of turbulence. I'm looking for it to last maybe 4 to 6 weeks max. So we're saying maybe another 1 to 5 weeks from now. So it's Monday, guys. I love seeing chips and technology outperform today. I love seeing the Nasdaq do better than the other indices, but I'm just not buying it today. I don't believe that it's going to actually sustainably rebound from here. And even if it does rebound tomorrow and into Wednesday, I wouldn't be surprised if the lows of last Friday were retested at some point. Now, one of the other things that we saw is we had the S&P 500 break below its 20-day moving average for the first time in over 60 days. In past instances where it did this, okay, where the S&P was up above the 20-day moving average for over 60 days and then eventually broke below it, the following returns over the next week, even 2 weeks, really weren't that strong. So this is why I'm prepared for not necessarily a significant pullback. You can see that the percentages of the declines are fairly mild. I just don't think we're in that easy money layup setup environment that we've been in over the last 4 months. Again, I think that we can go back into that type of environment, let's say in a month and a half, 2 months from now. I think you're going to be rewarded handsomely for being bullish. But this has a lot to do with just understanding where you are in time, understanding where you are within the different types of trends, the long-term trend, the intermediate term trend, the short-term trend. So let me be very clear. Nothing, absolutely nothing has changed when it comes to the long-term and the intermediate term trend in stocks. They are higher. They are pointed up. What does that tell you? It tells you that your strategy, if you want to trade with a trend, if you want to increase the odds of being on the right side of the market for the most amount of time, one, and two, for the most amount of price swings in one direction or the other, you want to be bullish. However, when it comes to the short-term trend, that's where the risk is. That's where the risk is. So you really only get corrections, you only get market crashes when the longer-term trends start to roll over. So how do you know when the longer term trends start to roll over? Well, that's one of those things that I love to share with my friends over at the Trinity Trade. Okay, so I think the market's catching its breath. You can see how stocks behave when you have gains of 3% or more in the Nasdaq, and usually, the second half of the year is a bit more turbulent. So you actually have an average, average to medium decline of around 4 to 5%. Again, I don't necessarily see the market acting this way, but we are going to be looking for some turbulence at some point. And you can even have a situation where you carve out a low here in the next week or two, rally back onto new all-time highs, and then see like another 10% correction. So again, just things to be prepared for. All we can do is assess, strategize, and plan for the various probabilities, and then basically position ourselves on the most likely outcome as more and more data comes into the picture. So let me see here. I do want to jump back over to Think or Swim here, because I do want to save my big reveal for the easiest trade over the last few decades in just a moment. Let me just check the chat here real quick. Okay, looks like we're doing all right. Let me check my portfolio. Wow, I actually, I'm pleasantly surprised with how this market's holding up today. Ethereum's having a really big rebound. A lot of tech names are doing well. Some Chinese names are doing well as well. Let's take a look at that. China is up about 1.5%. Some European markets, Germany up 1.2%. Poland been very strong this year, kind of quiet on the day. Greece has been a beast. That's up 3.5% today. So, it's looking pretty good out there. But, I do like the Chinese tech sector, K-Web, Chinese internet sector. I think that's shaping up to be very good. And we got some names in that space that are actually doing all right at the moment. So let's go ahead and take a look at some of these big tech names. We did get past the majority of the big tech earnings. Really, all that's left at this point is NVIDIA, and I believe it's on the 24th of April. But they all beat. and some of them still sold off. So I always get this question, why did the stock sell off if we beat on earnings? Well, it can be a few things. It can be, the guidance wasn't good or the guidance wasn't good enough. But this is why I always say, perception matters more than reality. Perception matters more than reality. And so, if we're going to try to understand the perception of the market, then we need to study the price action, because the price action reflects all of the participants, what they're doing, right? Are you bullish? Are you bearish? Well, you're either buying or selling. Okay. Let me see. 1 second here. Okay. Okay. So yeah, like I said, all we have left is Nvidia, which is having one hell of a day, up almost 3%. I'm still long Nvidia in the $1 million challenge. I own Advanced Micro Devices over in the Trinity trade. We booked profits on that last week. And then this is another name over in the Trinity trade, Astera Labs, getting really close to its upside target at 148, 145.80. So we'll be looking to book some profits on that. We do have earnings on this stock. Is it today? Tomorrow. So I would love to be able to take some chips off the table on this stock today. Very textbook action that we've seen in this name. You had that correction earlier in the year. You can't really see it because of my drawings. Let me actually remove the writing on this. But you had that correction. You formed a significant higher low when it comes to the weekly chart. Then you formed another higher low here. Okay. Now we're just looking for a new high. And that's basically the logic that I deployed to take this trade. I said, I need to see a higher high. So I'm going to make a bet that it's going to make a higher high. And it's really close to doing that. It's really close to doing that. So that one is looking pretty strong right now. All these other big tech names, Meta, strong rebounds today, Amazon. That one has actually suffered a little bit, even though they beat on earnings. And that's looking all right at the moment. When it comes to Tesla, this is one that we've been very patient with, and we know that Tesla has a tendency to just start ripping out of nowhere. So right now I see it as building a big, beautiful base, And, you can start to clear some of this resistance, start making a couple more higher highs. I know Elon has fallen out of favor in some respects. That I think we'll see it rip. Let me see. Just checking the chat here. Well, we already had, we did have a correction earlier this year, James. You had a 19% pullback. And so statistically, the number of times you get something like that is, actually every couple of years. So it's, you usually get like 5 to 10% pullbacks per year. But that's about it. And that's just what the numbers have shown. Yeah, Raj, Palantir earnings today. That's been, I think, the best performing stock in the S&P 500 since the low a couple years ago. So this is looking good. This is another name that I own, target of 175, hitting a new all-time high today. So I like what I'm seeing in that department as well. Meta, yeah, we looked at that one. Nice rebound. How about Netflix? This was one of the concerns that I had, because this is a stock that has done very well recently. And yeah, it had a good earnings and didn't really hold up that well. So, okay, guys, when it comes to stocks, are you ready for the easiest trade ever? Are you ready for the easiest trade ever? I need to know whether you're ready for the easiest trade ever. And in the meantime, while you're figuring that out, I'm going to take a sip from my very unique water cap. Aquapana here is a lot less expensive, as you can imagine. Okay, so the easiest trade ever is simply when you take a look at stocks and look at the 200. Oh, you know what? Let me actually jump back over to, I'll do it on Thinkorswim. I'll do it like this. So we're going to do a study. We're going to do SPX. Okay, we're going to do SPX. So what I'm going to do is go to time frame. We'll do, I'm going to add a time frame. We're going to do 1 year, 15 years, aggregation period. It's going to look funky. Okay, did it not show up? 15 years. There we go. Yeah, there we go. It wouldn't even show the whole thing. But if I just lay on a 200-week, well, you know what? I have it in the other chart. Let me just do this. 200-week moving average. Okay, 200-week moving average. If you just buy stocks when they drop to the 200-week moving average, I'm looking at the Dow Jones here. Look at, if it touches the 200-week moving average, okay, you had that in 2011. You had that in 2015, 2016. Then it didn't touch it for over 4 years. Then you didn't touch it for another 2 years. Then you almost touched it this time around. Okay, but basically, if you buy stocks when they drop to their 200-week moving average, you're doing pretty good over the last 15 years. And we almost touched that back in April. We almost did. I'm actually looking at the Dow here, but you could do the same thing for the S&P, same thing for the QQQ, same thing for the NASDAQ, because that represents extremes. When you go back and touch the 200-week moving average, right? What does the 200-week moving average represent? It represents the average price of more or less the previous 4 years, right? Because there's 52 weeks in a year. 52 times 4 is 208. So if we use a 200-week moving average, you're basically looking at the average weekly price over the last 4 years. Markets do generally trend in the direction of averages, but they have extremes when they touch them or drop below them. But it really does add context to the extremes that we faced in 2020 and even in 2022. Now, earlier this year wasn't really that extreme, but it was notable. It was a significant pullback. It was a very healthy, normal cyclical correction. And those of us that stuck to our rules, and maybe I can sit here and say, oh, I should have played that pullback better, but that's not really going to offer you much value today. But we have done very well out of that low. We have recovered all of the losses that we had during that pullback. And what's interesting is that actually, and I've been saying this, I actually suffered more at the end of January and the month of February. March and April did well. March and April is when the market was actually blowing up, but I had already suffered some of the losses. But ever since that low, we have been ripping to the upside. We've been calling it the Great Tech Reset. And there has been a massive reset in tech. So again, this is how I know guys like Garrett, they love their moving averages and they use them very well. I'm not the biggest moving average guy. Admittedly, I'm not. I use Bollinger Bands, which is what's on this chart here. But this is where the value of a moving average comes in. And it comes across longer term time frames. So I hope that helps. Just add a little bit of context to, where on a chart you can help see the extremes are. And I'm using it mainly for the indices. In this case, Tony, it was the weekly moving average. Yep, 2 Carter, my Bollinger Bands are at 20 in this case. I do have a theory called standard deviation time theory, although I don't really talk about it that much. Maybe one day I will share more about it, but it does have a, last time I checked, it was like a 78% hit rate for calling bottoms in the stocks. So that's pretty good. But yeah, the Bollinger Bands that I use on this are at 20 period. So anyways, let's go ahead and take a look at what's going on in crypto, because seeing some nice moves there. Ethereum up 4.5%. Very nice rebound there. It's been correcting a little bit longer than stocks has, along with Bitcoin, because keep in mind, stocks hit new all-time highs last week. 2 days ago, guys, we hit new all-time highs on Thursday in both the S&P and in the NASDAQ. Okay? But when it comes to crypto, Bitcoin hasn't hit a new all-time high since July 14th. since July 14th. Okay. Then you have Ethereum, which hit its high last week too, but Ethereum has actually been the best performing asset class since the April 7th low. Since the April 7th low, up over 100% in 4 months. And that's without leverage, that's without options, that's without futures, that's without anything fancy. That's just good old cash market. Good old cash market. So these are the types of opportunities that are presented to you in this market. Take a look at some of the big moving names. MicroStrategy, a nice rebound today. I did get whipsawed out of that last week. They had a blockbuster earnings report. I am interested in this stock again, to be honest with you. I think it looks pretty good. You got HUT, which we still own here. Okay, I do want to raise the stop loss. We didn't do so on Friday, but I do plan on doing that here soon. We booked nice profits in Mara, got stopped out of it again. If it wasn't Monday and if we didn't have, such risk off signals, if we had a bunch of risk on signals in this market, I would say, hey, let's go out and buy this today. But since we have some risk off signals, I want to exercise some prudence, some caution until seen otherwise. And that's a really important tool, a really important skill to develop as a trader, is just being okay with just watching, being okay with being patient. That is the edge. That is the ultimate edge, is being okay doing nothing. Less is more. In this world of abundance, where we have all this stuff that we don't even need, less is more. Less is more. So, yeah, Mara looks good. Iren, watching names like that. I got a couple names over in the Trinity trade doing well today. Galaxy Digital, APLD, Applied Digital, seeing some nice bids on that front. Of course, gold and silver having a pretty solid day as well. Silver up more than gold. Silver miners up more than gold miners too. Actually, take that back. GDX is up over 4% now, up more than silver miners, but silver spot is up more than gold spot. So that's a pretty good sign, I think, for the sector overall. I do think there's a possibility for some serious downside risks in gold. When I say serious downside risks, I mean like a correction in gold at this point, probably back to like 3,300, but not before. Maybe we go to like 4,000, maybe even 5,000. We'll see. We'll see. But I am liking that more and more. Seeing some nice breakouts in some individual names, hitting new highs. AGI, KGC, good rebounds. KGC has been really strong. That's been a stock that has done very well this year. So textbook consolidation, textbook digestion of the gains. So I like what I'm seeing on that front. And again, the dollar story with gold this year has been dollar weakness. So the question I've been asking is, how does gold and silver react if we see the dollar start to strengthen? Does that mean that there'll be an unwind in precious metals? And that's a possibility. That's a possibility. So yeah, we are hitting new highs today on an intraday level. So let me see here. I'm just checking a couple things here on the side of my screen here. Okay. Let me run the screener for mid-cap stocks. We'll jump over to that now. Small list. Only got 29 names. And a lot of them actually related to crypto. But we'll start off with Pagaya Technologies. That's been a pretty strong name as well. Very strong. Tech. Yeah, this is something I want to have an alert on. 3364. Oh, what did it do there? 3364. So Pagaya looks good. Okay. AMSC. We still got AMSC in this room, guys. What a stock. What a stock. And I really look forward to raising the stop loss up on this even more. Ava, we got stopped out of recently, which is unfortunate, but maybe not, because it keeps selling off. So this is why we get stopped out of names and we just let it go, because you never know how far a stock can drop. Then you got some of these crypto names like Sharplink Gaming up about 15%. Okay, bit too much to chase at this point. And then we have Centrist Energy. This is one of those nuclear names that has absolutely been incredible. 5x name since April. That's pretty impressive. This is a name that I'm not familiar with. INDV, Indivior. Wow, that one already broke out. Ship has sailed. Bloom Energy, that one's finally started to move some. So that looks all right. Adele, you want to look at RGTI? Yeah, that I've been a big quantum bull. And let's take a look at the quantum ETF. Yeah, nice day there today. There's a lot of names in quantum. We had some big success in names like Arquit. We've actually done really well in quantum this year. But again, you may even have a situation where the junk stocks like these, they don't have a lot of revenue, start to rally. Yeah, that's a good point. Don Hashpipe says Don did a class that if you hold for that long to sell stuff against it to increase your profits. Put that together with the easy trade. Yeah. Let me see. I like that. It's actually, one of the things that we try to do in the $1 Million Challenge, because Don throws in some options trades on those as well. So okay, what else we have on the screen? ERJ, we've looked at that recently. Oh, 10-cent. Let's see how that, because we have a position in that. It's still screening well. Nice rebound on 10-cent. All right, who here has 10-cent? That was a trade that we shared a couple weeks ago. Pretty much back to break even on that after that nice rebound. Harmony Gold, I definitely want to look at that one because that's been a strong metal name too. This looks good. This looks good. Okay. Well, maybe I can well, what's this close yesterday? 1422. I'm gonna watch this one. I said I didn't want to throw out any stock ideas today, but metals are kind of their own beast. So let me throw out an idea here for you today, real quick, and we'll look for. Well, I don't know if the risk is worth the reward, because if we go back to the highs for that easy trade, yeah, about 3 to 1, a little bit better. We'll hold off on that for now. Would you add to gold positions here? Jay, I'm not. I mean, I've added some gold positions recently. But again, it's just Monday. It's just been a weird environment the last few days. So I'm not trying to be too aggressive on the long side at this point in time. So anything else that we got here? What else I have on this list? Sable Offshore. I think that's a metals. Not metals, sorry, energy. Who do we have coming up next? We have Brandon coming up here in about 5 minutes. Yeah, AG, that's one that's been on my radar too. I took a swing on it a couple weeks ago and it just didn't really work out. But let me check back in on the indices here. Yeah, we're still hanging out near the highs of the day. So we actually, Brandon just jumped on here. And I'm actually going to run here a couple minutes early because I am late to a little service here. So, Brandon, are you ready to take over?
Oh man, yeah, sorry. Like my computer's turned off and I got downstairs. I'm like, dang it.
No, it's
We're
okay.
ready.
Well, I appreciate you jumping out a couple minutes early. I'm
Man,
gonna
we're doing
jack.
it outside. I love it.
Yeah, oh yeah. It's very nice. It's very pleasant today, and I'm gonna take it when I
Yeah,
can
yeah,
because other days when it gets above 90, I don't know if I'll be able to do it. So
yeah.
yeah.
All right, see you, Johnny. I'll
All
let
right.
you go.
Thanks again, Brandon.
Yeah, we'll see you. I've been I'm just gonna send my request.
Oh, there we go. I gotta stop sharing. Did I do the hosts? We don't want to fumble that. Okay, good.
Let's see.
We're out of
We're
here.
good.
Thank you.
Sorry. All right, see Johnny. All right, so man, I've been like flirting with, hey, could I get start